In this video, I'll explain how to start your own real estate brokerage in 2024. Now, the first step is get a broker license. That means get your own broker license, or have a broker license, or hire a broker license. Now, in California, I have a real estate broker license and I'm the designated broker of the brokerage. But I opened a real estate brokerage in another state. I wasn't licensed in that state, so I hired a broker of record. I found someone online that offered their services as a broker of record for a flat monthly fee. It didn't matter how many transactions I closed or how many agents I recruited. I just paid this broker a flat monthly fee and I was able to build a brokerage in another state. Most of the time, brokers start their own brokerages. Now, once you have a broker license, you are in business. It's your name, comma, broker. That's it. You are now legally authorized to broker real estate sales on behalf of others. But it's not quite that simple because there are other implications involved. Even one-person shows have professional liability insurance. That is the bare minimum. And I'll talk more about that in a little bit. But the vast majority of brokerages incorporate, and they incorporate for legal liability reduction. And the reason is that now when there's a dispute that arises from a real estate transaction, attorneys name all parties involved. Even if you as an agent were far on the peripheral, they often name everyone. And the idea is that your corporation is named as the entity that was doing business rather than you personally, so that you personally aren't liable for whatever the outcome is. So you'll see that these brokerages, established brokerages, have all incorporated. Now, incorporating, while there's the legal liability reduction benefit, there are also drawbacks as well. The drawbacks, there's several of them, but filing articles of incorporation with the Secretary of State. So you have administrative paperwork headaches in addition to more costs paid. You're also going to have a different license with the Department of Real Estate. So imagine this, you already have your broker license as an individual with the Department of Real Estate. If you decide to incorporate, you now need an additional broker officer license because you're an officer of the corporation, and then your corporation needs to be licensed with the Department of Real Estate. So there are 3 different fees you're paying. There are 3 different items you're filing with the Department of Real Estate in order to conduct business as a corporate entity. Again, this is the standard for most established businesses that have been doing business for a while because they know the legal implications and how high liability it is to do volume of transactions over time. In addition to that, you have a minimum state income tax of $800, even if your brokerage doesn't make any money. So you have a minimum state income tax fee on your corporation. Then of course, there's the cost of bookkeeping and filing a corporate tax return. So there are additional tax implications as well. So you are going to have higher startup costs. You're going to have more administrative headaches. But once you pass that barrier of entry, it allows you to scale up and recruit as many agents as you want and really grow as big as you want. Aside from incorporating, if you want to scale, going back to the sole proprietor individual broker, even if you decide not to scale your brokerage up, you need to have professional liability insurance, commonly known as E&O or errors and omissions insurance. The standard policy offers $1 million in coverage. Now, the cost of E&O will start smaller relative to the volume of transactions you've been doing. When you apply for an E&O policy, you're going to have to fill out information that says how much business activity you've transacted in the last year, and how much you foresee in the coming 12 months. And then your premium, your cost for that insurance is going to be based off of that. Now, as you scale and you grow and you do more transactions with more agents, that cost will increase. That's really the only cost that's going to increase aside from personnel, staff that you hire. But the idea is that if you want to scale, you're going to incorporate and then you're going to grow from there. Once you have that external infrastructure set up in terms of the structure of your company, you'll also need internal policy and procedures, your own proprietary contractor agreement. And part of this isn't just for your protection. Of course, this is just part of doing business, but over time, you will have the Department of Real Estate look over your files, your paperwork, and your internal policy and procedures. It's going to happen. As much as it sounds like additional work or a headache, knowing that one day you may be named in a dispute, or you're going to have an audit from the Department of Real Estate. This is all standard in the course of doing a lot of business over time. And if you prepare for it in advance and everything is properly organized from the outset, then you won't have any issues when an issue does arise. Inevitably, you will have the Department of Real Estate go through your files. That's just part of doing business. You'll also need a transaction checklist, and you'll need ways to store the file. There's a minimum requirement of 3 years for file storage. Another reason why I mentioned you should consider whether or not you want to scale and grow or you want to stay very small is you're going to come to a crossroad, and you'll have to determine whether or not you want to be the operator or actually someone that's out in the field listing and selling real estate, because doing both is extremely challenging and will drive you to the brink of madness. I know, I speak from firsthand experience. It's virtually impossible to do both and grow your company large. If you want to grow your company and get dozens, hundreds of agents, then you're going to absolutely need to just assume a role of being exclusively an operator. I remember one of the agents told me, this was like 10 years ago, and he had a real estate brokerage that went out of business. And he said, if I had to do it over again, I would get a small commercial space and with high visibility. I would hire a broker of record, maybe an older retired person that just could sit there and review the paperwork and make sure everything is compliant. And then as the operator, I would just recruit. I'd spend all my time recruiting. And I actually agree. I think that person is 100% correct and accurate. That simple model is the best recipe for having a successful brokerage that I can think of. In conclusion, you'll want to ask yourself whether or not you want to keep it small, be an individual broker, operate as a sole proprietor with professional liability insurance. Even if you do, you're going to have to still have the same policy and procedures, transaction checklist, internal compliance documents that show that you adhere to a certain internal standard that is ready to be scrutinized and audited by an official from the Department of Real Estate. If you want to scale and grow, that's when you need to incorporate, and that's when you need to grow bigger. And it's two different things. And for that reason, you need to put a lot of consideration into how you want to build a foundation of the brokerage that you want to grow. If you have any questions, please leave a comment. Thank you for watching.